Welcome to this YouTube channel. In this video, we are going to talk about the top 10 steps to invest in the stock market. So before starting this video, like this video and subscribe to our YouTube channel for future updates. You've come to the correct place if you're ready to start investing in the stock market, but aren't sure where to begin. It may come as a surprise to find that a $10,000 investment in the S&P 500 index 50 years ago is now worth roughly $1.2 million. When done correctly, stock investment is one of the most successful strategies to develop long-term wealth. The following are the top 10 steps to investing in the stock market. Number 10. Stick to the plan. Buying low and selling high makes sense, at least until emotions take over. On paper, it appears to be a simple process. Buy an investment and hold it. Security prices, on average, tend to climb with time. According to history, when the market has a period of downward volatility, though, all of that patience and rationality can easily be lost. Rather than waiting patiently for the slump to turn into a rally, investors adopt the attributes of traders and believe they must take action to protect themselves. The worry is understandable in some respects. Even though the market has been in an uptrend for more than a decade, today's pre-retirees vividly recall the 2008 catastrophe, which seems to be fresh in people's minds. It can be tempting to sell equities and store money in cash until the coast is clear. Rather than sticking to the stock and bond allocation that has been calculated for the greatest potential retirement outcome, investors may assume that moving money around when market circumstances change or in response to gloomy economic forecasts is sensible. The pundits, on the other hand, are frequently mistaken, and such seemingly logical behaviors are almost always motivated by fear and justified by a reasoned argument, usually to oneself. Number 9. Pick the best stocks and beat the market. How can you pick a few stocks worth investing in when there are tens of thousands to choose from? Whatever some experts claim, combing through every balance sheet to find companies with a good net debt position and growing net margins is simply not doable. Number 8. Open a stock brokerage account that doesn't charge commission and get ready to invest. A brokerage service that corresponds with your investing goals, educational needs, and learning style is required for profitable investing. Choosing the finest online stockbroker for your needs, especially for beginner investors, can mean the difference between an exciting new income stream and a frustrating disappointment. While there is no surefire way to ensure investment returns, you can set yourself up for success by choosing the best online brokerage for your needs. Take a time to think about what's most important to you in a trading platform before you start clicking on brokerage adverts. Depending on your investing goals and where you are on the investment learning curve, the answer will be slightly different. If you're just getting started, basic instructional tools, thorough glossaries, simple access to support staff, and the option to place practice trades before playing with real money may be priorities. If you already have some investment expertise, but want to get serious about it, you'll need more high-level education and opinion-based materials from experienced investors and analysts, as well as a decent selection of fundamental and technical data. Number 7. Sign up for free stock market courses. Stock trading is no longer the exclusive domain of investing professionals. Thanks to the internet, anyone with access to a computer or mobile device can now make money by trading stocks. A growing number of people are turning to stock trading as a method to supplement their income. And those who are most committed to learning the necessary skills can make a lot of money. While it isn't exactly rocket science, becoming a great stock trader has a high learning curve, especially for those who are just getting started. Reading a book on stock trading theory is possible, but getting the practical knowledge, skills, and confidence to trade with your own money necessitates more thorough training with real-time support. That's exactly what a good online stock trading course can provide. Number 6. Sign up for free, informative financial newsletters. By utilizing filters to zero in on important information, you may learn how stock markets work and remain informed on business and economic news. Number 5. Practice trading in the stock market. You put part of your hard-earned money at risk when you start trading in the stock market. If you don't have much expertise with investing or trading, it's a good idea to experiment first before investing real money. Fortunately, The internet has a wealth of services that allow you to practice stock selection or market trading without risking your money. The larger financial websites have free portfolio tracking services, which you can use to create a practice stock portfolio and assess the performance of your stock picks. Yahoo Finance, Google Finance, The Wall Street Journal, and MarketWatch are examples of such websites. You must create a personalized login to access these sites, after which you can create and manage one or more practice stock portfolios, if you plan to primarily pick equities and hold them for a long time. These portfolio services are ideal. The portfolios, on the other hand, will allow you to buy, sell, and account for brokerage commissions. Many online brokers offer virtual trading accounts if you wish to practice active stock market trading. With one of these accounts, you'll be given a simulated money balance and will be able to trade using the broker's trading tools. You can use a virtual account to learn how to use a brokerage account, the stock market, and design your own trading strategy. Broker virtual accounts also allow you to test out different brokers' systems and tools, which can aid you in selecting a broker when you are ready to trade with real money. Number 4. Pay off high-interest loans and credit cards. It's difficult to choose between paying off debt and investing because both are worthwhile goals that can help you build a secure financial future. You don't have to choose between the two. If you budget properly, you can put money toward both. Investing will be a big part of your retirement plans, and paying off debt can help you buy a house or start a family sooner. If you have high-interest debt, paying it down may be a better option than investing in the stock market. Personal loan interest rates can reach over 36%, especially if you have bad credit. Although stock market returns aren't always that high, APRs on credit cards are frequently high as well. Even if you decide to invest, you should not cease paying off your debt completely. At the very least, make your minimum monthly payments before putting any extra money into investments. Otherwise, you risk damaging your credit score and making it more difficult to qualify for future loans. Making only the minimal monthly payments, on the other hand, may result in you spending a considerable amount in interest over time. Number 3. Always know your credit score. A good credit score can aid in the purchase of a home, the startup of a business, or the acquisition of a car loan. Getting a decent credit score isn't difficult, but it's critical for your overall financial situation. You'll have an easier time being approved for an apartment if you have a decent or excellent credit score. You'll obtain better rates on auto and homeowners insurance, and borrowing money when you need it will be less expensive. When faced with an unforeseen financial crisis, such as a layoff, having a decent credit score can be very beneficial. If lenders regard you as a reliable borrower, you'll be more likely to receive favorable offers for 0% financing if you ever find yourself in a tight spot. Credit scores range from 300 to 850, with 300 indicating low credit and 850 indicating outstanding credit. Credit score ranges differ depending on the credit scoring algorithm employed, FICO versus VantageScore, and the credit bureau that pulls the score, Experian, Equifax, and TransUnion. Number 2. If your employer offers a retirement plan, then take it. Employer-sponsored retirement plans are a great method to save for retirement and offer a variety of advantages. The plans lower your taxable income, which means you'll pay less in taxes for the year. They grow tax-deferred, which means any profits growth is taxed only when withdrawn, and you can obtain free money through employer matching contributions. Number 1. Start saving money each paycheck. There are various formulae and budgeting techniques to employ when determining how much you should save from your income each month, the most prominent of which is the 50-30-20 rule. This means that you should save aside 20% of your monthly income, or every paycheck. This formula suggests allocating 50% of your monthly income to basic costs, 30% to discretionary spending, and the remaining 20% to savings. While there is no one-size-fits-all solution for everyone, there are several criteria you can use to help you figure out how much to save, and this is one of them. Ultimately, you want to save as much money as possible for retirement and other major life expenses. However, you should keep in mind that you'll have enough cash flow left over today to have some fun with. You won't be able to restrict yourself and go back into a negative spending habit this way. What do you think about this video? Do let us know down in the comments section below. If you enjoyed this video and want to hear from us again, be sure to hit that subscribe button before you go.